EV skeptics are beginning to anticipate the collapse of the EV industry. Although the EV market is still growing, the last year has been quite murky. EV growth rapidly slowed down. Is this a harbinger of the future of EVs? Is the idea of massive electrification doomed? Or is this part of a complex puzzle that automakers are going to need to crack in the future? Stay with us and find out what's the story behind the so-called EV meltdown. Is the EV market really stalling? First of all, let's solve the key dilemma. Is the EV market slowing down? The last few years were characterized by tremendous growth in the EV market. For a few years in a row, year-over-year growth was around 90%, but that trend changed over the last year. Last summer, we found out that in the period between summer 2022 and 2023, the growth curve has flattened. What adds to the perplexity of all this is the fact that the EV market is growing by 50% on an annual basis. In November alone, the market share of new EVs in the US reached 7.5%, marking a significant milestone of the entire year, with more than 1 million EVs sold. Overall, the market is still growing pretty fast. From the customer's perspective, there's nothing to worry about. The actual problem in all this mess is that both automakers and governments had much greater expectations. They expected even more impressive growth, which would have been in accordance with their plans for massive electrification in this decade. Biden's administration is sticking with the initial plan of massive electrification as a part of the green agenda. According to that plan, EVs are expected to take 2/3 of new cars sold by 2032. With the growth curve flattening, many realize this plan was probably a little bit too ambitious and that it most likely won't be achieved. The reasons are numerous and we will get to them in a few moments. So make sure to stay with us until the end of the video. Cracking the EV economy. So, if there is something we could call a meltdown, that would be in terms of expectations that automakers, government, and investors in general had. As Emmanuel Rosner from Deutsche Bank recently said for CNBC, the expectations were so high that we are now seeing a collapse in this. According to Rosner, what concerns us is most automakers haven't cracked the economics to make an EV affordable, and as a result, we don't really see a path in the near term for this to happen. It could take several years until such models come out, and this is going to continue to put tremendous pressure on both their earnings and probably on stock prices. In other words, car makers still haven't learned how to make affordable EVs that could compete with traditional gas-powered counterparts. Along with the drop in gas prices we've been witnessing in the last several months, this is the key reason why average consumers still hesitate to enter this transition. The phase of so-called early adopters, who typically come from wealthy households, is over, while lower-income households still don't have enough reasonably priced options on the market. EVs are still way more expensive than their gas-powered counterparts, so it doesn't surprise that sales numbers are way lower than expected. But even with such high prices, EV car makers are still not making any profit. They are still losing money on every EV sold because EV production takes time to be optimized. Facilities, production lines, supply chains, the whole process requires a higher level of efficiency to make production profitable. Governments are pushing too hard. So you probably wonder where the fresh money for all those EV investments is coming from. Well, so far it's been mostly coming from the profit made by selling internal combustion cars. The prices of gas-powered vehicles have been constantly rising in the last several years, despite the fact that we haven't seen any radical technological leap in the ICE world for more than a decade. The problem is that Biden's administration, as well as many governments around the world, are pushing a zero-emission agenda too hard. We already mentioned Biden's plans to electrify 2/3 of the new car market by 2032. Some European countries have even more ambitious plans. The only problem is that, along with the latest emission regulations, which will also reduce sales numbers of ICE cars, such an aggressive policy inevitably leads to the collapse of many legacy car makers. Major American companies already announced that they are stopping some of the major EV investments and pushing out billions in order to save capital. Ford is pushing out around $12 billion, while GM has already announced a couple of delays, including the production of the all-electric Silverado, which has been moved to 2025. To sum up, unless it wants to see a collapse of the big three, the government will have to ease up with this ambitious plan and let the transition go at a slower pace, because the average car buyer is showing great resistance to this transition. And no, it's not about being conservative. The reasons for skepticism are very rational. From the perspective of an average consumer, this definitely isn't a good time to buy a new EV, and we will explain why in a moment. Not the best time to buy an EV, other than environment-friendly features, although even that could be questioned. Electric vehicles are not a rational choice for a vast majority of American drivers. First of all, we already mentioned high prices. If you look at the current offer of EVs on the market, most of the offer was designed for early adopters with a high level of luxury, excellent performance, and therefore very high prices. The latest reports show that the average sum paid for an EV was $12,000 higher compared to the average sum paid for an average gas-powered car. The story doesn't end there. Theoretically, EVs should feature lower running costs compared to internal combustion cars, but that's not the case at the moment. First of all, the insurance premiums are much higher for EVs for several reasons, and often measure in thousands of dollars. Also, cheap recharging is possible only if the EV is charged at home overnight. But millions of Americans have no other option but to charge their vehicle at public stations, where the cost is pretty much on par with the gas prices. This leads us to another problem consumers have with EVs. Although the government is pushing for EVs extremely hard, it seems like it's not doing enough to make EV ownership convenient. The number of charging stations is still insufficient, especially in rural areas. Also, the technology is still not at the desired level to ensure the same level convenience as with gas-powered vehicles, because even with enough public stations, recharging is still time-consuming. For something gas-powered, vehicles need no more than a couple of minutes. Electric vehicles need half an hour or more. With the current car prices and other issues, consumers are still not ready to change their lifestyle for the sake of zero emissions. EVs are less reliable than ICE cars. Another thing that definitely impacts the current growth slowdown is the reliability of electric vehicles. Namely, the latest survey, taken by Consumer Report, clearly showed that EVs are not as reliable as expected. In theory, EVs feature simpler designs with fewer problematic points and potential breaks. But this survey, which included more than 330,000 vehicles produced between 2000 and 2023, shows the opposite. Electric vehicles cause 80% more problems than gas-powered cars, according to Consumer Reports. The reason for such poor performance are pretty obvious. Despite the simpler design, EVs are still a new technology that needs time to work out. Car makers still need time to solve all the bugs that come with new tech, especially when it comes to software, which is by far the most problematic aspect of electric cars. Battery integration, infotainment controls, advanced drive assist, and safety features, these are the causes of big headaches, affecting not just owners but dealers as well, because many of them can't solve these new issues due to the lack of professionals that are trained to work on these new technologies. Everyone needs more time. With all these issues in mind, we think we can all agree that there is no reason for pessimism. The EV industry won't collapse, but it will have to adapt to new circumstances to overcome this cumbersome situation, to untie this Gordian knot. To do that, the government will have to act first and stop insisting on such tight deadlines. Car makers need more time to make products that are actually appealing to the masses. So the first move is on the administration, which needs to be prepared for some delays in achieving its goals. Moreover, it will also have to do more in terms of making EV ownership more convenient to the masses. Massive investment in the infrastructure and more generous incentives are just some of the things that come to mind. On the other hand, automakers will have to change their strategy and stop insisting on things like ultimate performance, the latest tech features, and the overall sense of luxury. Consumers don't want that. They want affordable, easy to live with, and reliable electric vehicles, one that can actually compete with internal combustion cars. In other words, this EV revolution is way more complex than it seemed at first. It will take more time than most hoped for. This is going to be a much more challenging time for everyone involved in the EV market. Thanks for watching, and see you next time.